heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Ed Ludlow in San Francisco. Caroline Hyde's off. This is Bloomberg Technology. Coming up, car dealerships across the US halt services after a cyber attack. Full coverage ahead. Plus, OpenAI co-founder Ilya Sutskever announces a new AI research lab. We have that exclusive reporting. An AI video startup, HeyGen, hits a $500 million valuation in its latest funding round. We do discuss with the CEO. A very quick check-in on markets. The S&P 500 very briefly hit the 5,500 historic mark and then pulled back. We're flat on the NASDAQ 100. Broadly, we're kind of treading water after a US holiday. The story, though, is individual names in the AI infrastructure play. We are talking about Dell, we are talking about Supermicro, and of course, we're talking about NVIDIA. Later in the show, we're going to bring you details of what played out 24 hours ago on social media. Michael Dell saying that Dell is building an AI factory for Grok and XAI and Elon Musk. Elon Musk coming back on social media and saying Supermicro is part of the story as well. And you can clearly see Supermicro, the kind of biggest beneficiary of that move that's coming up. The top story in terms of news flow is what we were talking about a moment ago. Car dealers across the United States were affected by a second cyber attack this morning after an initial attack yesterday compromised the CDK software platform and halted business. These are some of the publicly traded dealerships and auto retailers that are impacted in the here and now, all moving to the downside. Let's get to Bloomberg's Jeff Stone on our cyber team. Okay, let's start with the latest because it's moving quite quickly. There was a second report of an attack this morning. What do we know?
That's right, Ed. This is a big, messy cyber attack. You mentioned there's a second incident just reported. That happens as this software provider that works with more than 15,000 dealerships around the country is already trying to recover from what looks like is going to be a pretty costly outage. The nature of the incident isn't quite clear yet. We know that dealers are waiting for more information from the company, but we know it looks bad.
Jeff, as I said, you're kind of a key member of our cybersecurity team. What was the vulnerability here? What was the security breach, and where did it happen?
The nature of the breach, the point of entry, is certainly still under investigation. But this incident fits with a recent string of attacks, certainly in the healthcare sector, that are targeting kind of customer service software providers and almost innocuous companies that a lot of your viewers won't think about on a daily basis. These companies sit at a key point in various supply chains, and when they are hit, there are ripple effects, costly ripple effects that have major impact throughout their supply chain.
Jeff, as you know, I've covered the automotive industry for quite a long time, and I've learned so much about CDK, 15,000 customers, front office, back office, but also like the names that have been impacted here on the name brand side are big ones like Subaru, Toyota. What have the responses from the companies been, and what have they actually been telling customers as well?
Please give us time and some patience. We know that dealerships, like I said, are waiting for more instructions from their parent companies, from CDK, as this continues to unfold. For now, a lot of dealerships are slower to make sales. We know that sales representatives are increasingly working with paper transactions rather than the quick automatic stuff that we've all become used to. So it's very challenging. They're waiting for more information.
Jeff, this is one hack in a series of hacks over years that you and I have discussed on the show. In terms of its scale, where does it sit in those that you've covered in recent years?
Growing. The healthcare sector, like I said, has been the main focus over the past year, 18 months or so. The cost of this, based on the number of dealerships certainly affected, seems to be high. We're waiting to see if there will be any government action on this or any guidance from the Department of Homeland Security, for instance, in terms of understanding the full scope of the incident. But for now, it's still calculating.
Bloomberg's Jeff Stone on a developing story. Thank you. Another big story we're tracking is over in China, where e-commerce giants have been slashing prices and using celebrity endorsements to boost enthusiasm for the 618 shopping festival. Bloomberg's Henry Wren joins us for more out of London. This is a newer one for me, Henry. I've been reading about 618, but if you were to summarize, you'd basically say that the consumer in China is getting an unprecedented level of incentive this week from the big e-commerce names.
Yes, indeed. So we're seeing things that we have been expecting. For example, the price cuts. PDD, which is known for its budget shopping site, Pinduoduo, has been keen to let its customers know that it has been putting forward the steeper than ever price discounts. But also we've been seeing something that's very unexpected. Let's say, for example, JD.com's founder Richard Liu is appearing on live streaming e-commerce, but it's not him exactly. It's a digital avatar of him. But also in the meantime, a pop star, Rihanna, who's pretty famous and popular in mainland China as well, is seen selling a Chinese style of pancakes in front of camera. So basically, we've been seeing everything here with all sorts of promotions.
We're talking about the names that we always discuss on this program: Baba, Pinduoduo, JD. That's the company side of the story, but there's also the Chinese consumer side of the story that we track so closely here on Bloomberg Technology. Is the idea that they're needing to discount so heavily, get so creative, I suppose, in their incentive, a sign that the Chinese consumer needs a bit of help?
Yes, indeed. So the story that we have been reporting all over is the Chinese consumers are still quite cautious in terms of picking deals. And this has been a trend that has been confirmed by this 618 event as well. The main message across the merchants has been price cuts, which has been seen across those live streaming platforms as well as these three big companies. But also in the meantime, we see local media reporting that some categories, for example, women's apparels or luxury goods, have been seeing very high return and cancellation rates as high as 75% to 80%, which really shows that consumers are quite cautious. Yes, they probably are spending because of those price cuts, those promotions, but they're pretty keen in terms of picking the cheapest deals, not necessarily the best in terms of quality.
Bloomberg's Henry Wren, who is all across the China tech beat. Thank you so much. Time now for Talking Tech. And first up, Masayoshi Son may be on the cusp of making a major investment in AI. Telling shareholders at the annual meeting, the SoftBank founder says they're looking for their, quote, next big move in tech. The comments come after the company saw a string of losses through the startup bets. Plus, OpenAI co-founder Ilya Sutskever has announced a new venture called Safe Super Intelligence. The company aims to create a secure, powerful AI system with no intentions to sell AI products or services like rivals OpenAI and Google are currently doing. Sutskever left OpenAI in May, just shortly after the return of Sam Altman and the ouster he was involved in. And finally, Dell announced that it's building out an AI factory with the help of NVIDIA to power Elon Musk's xAI, with Supermicro Computer also providing servers. The two companies have been adding server capacity in recent months in an effort to win more businesses making AI expansions. Remember that I sat down with Michael Dell last month, who defined an AI factory as the following.
You get into the ecosystem of all the software and the models that you're hearing about, the small and large models, the retrieval augmented generation. And of course, it's not just GPUs, it's also the networking and the storage and the memory that come together.
So let's be honest, that was a lot of buzzwords, but we're about to have a conversation where I think we can get to the root of what we're talking about, and that's with Nancy Tengler of Laffer Tengler Investments. And it's interesting, Nancy, because you actually got into Dell following earnings May 30th, and there was kind of a mixed reception to earnings. There's a growth story there about AI infrastructure, and there were some near-term concerns. But let's start with why you looked at Dell and thought, okay, this is the move I'm going to make.
Well, Ed, thank you for having me. A couple of reasons. I mean, we were late to the party, and that will happen from time to time. We've been late to other parties, but the point is that you get there. And we saw it as an opportunity to step in, not just on the data center side of the business, but the PC upgrade cycle part of the business. And so if you look at the hyperscalers, they are spending or spent about $200 billion on AI in their budgets. And so we think the use cases are real, the technology's real, the monetization is real. And so this was an area we were underweight hardware in our tech exposure, and this was an area where we could jump in.
So you do not hold NVIDIA, which is really interesting. The big story we're talking about this morning is what played out on social media Wednesday, that Michael Dell posted they're building an AI factory for xAI to power Grok. And Musk responds and says, well, actually, Supermicro is involved as well. So let's do some math, which actually my colleagues at Bloomberg Intelligence kindly walked me through this morning. If this deal is for Grok 3, Musk has said in the past he'll need 100,000 H100s for that. And if you assume the average price of a server rack's about $1 million, there are 36 NVIDIA GPUs in each rack. You'll need 2,700 racks. That could mean $1.5 billion in bookings for both Dell and Supermicro if BI is right about the $3 billion deal value. So you don't hold NVIDIA, but you kind of do indirectly through Dell. Is that fair?
Yes, I'm going to take that because, it seems silly to not be in NVIDIA. We have very strict valuation metrics, and so I'm waiting for the hedgies to go to the Hamptons and then hoping we'll get a pullback in NVIDIA. But I think that is the important thing to be thinking about, that the investment cycle, as the large language models become larger, the power needed to generate the metrics around that is going to augur well, not just for NVIDIA, but for Dell and for Broadcom, we own the poor man's NVIDIA, which is Broadcom. And I'm pretty happy with that holding. It's up 65% year to date, or 70, but that pales in comparison to NVIDIA's 170%.
On the valuation question, when last I checked, and I don't have it in front of me now, but I think NVIDIA trades at something like 45 times 12-month forward earnings, something like that. And so it's a rules-based issue for you. You just called Broadcom the poor man's NVIDIA. Could you just extrapolate a bit why you'd say that?
Well, it's certainly not as much in the sweet spot, but Hock Tan, who, by the way, is the highest paid CEO in corporate America, he is a master operator of the business. So they've already made, VMware's been on the books for a quarter. It's accretive. It smooths out the hardware cycle, and they will be facing some competition, certainly, from NVIDIA in the networking side of their business. But we just think it's a company that it has paid. We've owned it for a long time. It's a member of our 12 Best Ideas portfolio, and we continue to like it here. It's the cheapest of the group. And I love these old economy or old technology names like Broadcom, Oracle, Dell, who have remade themselves, and that's thanks to strong management teams who pivoted when they should have pivoted, just like Satya Nadella did at Microsoft, which is another 12 Best Ideas name for us.
One of the other top stories on Bloomberg today is this research note from Citi, and they argue that AI is going to displace more jobs in the banking sector than any other sector. And I was looking across your portfolio, and you have this 12 Best Ideas portfolio, which includes Goldman Sachs. So if we stick with the AI theme, what do you make of that Citi call, that it's going to be in banking where an impact to the workforce is most felt from AI?
Yeah, I don't think it's going to be the Goldman side of banking. I've been in this business for 40 years, Ed, and I've heard all sorts of prognostications about what will happen that never happens. I think artificial intelligence will augment workers, and particularly the kind of professional workers that Goldman employs. So I don't think it's a bank teller, robocall, side of the business that will be potentially impacted. But that's not Goldman, at least not anymore since they've exited retail banking. And we think the M&A activity is certainly going to accelerate. So we still like it here. It's still very cheap based on our work. And I'm not worried about that.
Henry Wren, who covers China tech for us, was just on talking about the Chinese consumer and how many of the big Chinese technology names are doing heavy incentive this week. If there's one thing that keeps Nancy Tengler up at night, I think I'm right in saying that it's the consumer broadly, but I guess principally in this country. Why is it such a concern to you, the state of the consumer?
Well, so I think there's two consumers. There's the baby boom consumer, which I'm a member of, who has half of the country's net worth. And so they're spending, they're retired, generally speaking, and they're not being impacted by this. They have big stock portfolios, but it's the low-end consumer that's just getting crushed by, sticky inflation, which is still with us. Only on Wall Street do we say, oh, inflation's declining because the rate of change is going up less fast than it was previously. So I think it's wearing on them. The interest expense, the access to credit, all of this is declining. And then we know that, full-time jobs declined in March year over year by 275,000. Hours worked declined. Wages in terms of average hourly earnings declined. So this is a problem spot for the economy. And, the low end of the consumer is en masse much greater in numbers than the baby boomers. So I think we have to watch this. And the retail sales numbers, though they're not comprehensive, were disappointing, and the revisions down were also disappointing.
Earnings season is once again around the corner, it's silly to say. Take that concern and give me your expectations for technology earnings in particular.
Oh, I think tech's going to continue to shine. And just for the record, we've been advocating overweighting tech since the fall of 2022 when everyone wrote it off once again as not the place you wanted to be, that the tech trade was over, that higher interest rates were going to hurt technology companies because that was an old school view of the world. But in fact, most of the mega cap tech names have benefited from higher interest rates. So we think earnings is going to continue to be a bright spot through this year and into next. And so we want to own, the hyperscalers. We want to own the hardware companies. And, they wrote off software a few weeks ago, but just wait a few weeks. And I think the hedge fund guys will be back in buying software. So there's my cynical view of the way this world works.
Cynical maybe. I appreciate the admission that you were late to the party on Dell, but in the end you made it to the party, and that is what matters. Nancy Tengler of Laffer Tengler Investments, thank you so much. Stick with us. We'll be right back. This is Bloomberg Technology. Eight former employees of SpaceX who were fired in 2022 after writing an open letter criticizing Elon Musk have now filed a lawsuit against SpaceX and CEO Musk alleging sexual harassment and retaliation. We spoke with one of the plaintiffs in the suit, Paige, Holland, Thelen.
SpaceX employees are encouraged to follow SpaceX and to follow Elon Musk on Twitter. And in my orientation, we were encouraged to follow him on Twitter. In the employee handbook, it mentions that his Twitter feed is a source of official company news that's allowed to be shared with the public. So if you're not following him on Twitter, then you're missing things. And actual delivery dates and deadlines and functions of entire teams and departments are impacted day to day by what he decides to tweet in the middle of the night. He decided to, put out a return to office order and talk about it on his Twitter, and it became the law. And a friend of mine had a Starship delivery date changed overnight because it was on Twitter, so now it's law. So it's not just the nonsense, but the stuff that impacts people's actual day-to-day work functionality is tweeted about, and then since he's already said it and it's public, it's now written into the official plan.
It was interesting that you said you felt like an outsider, an other, because that you're female, but many would say, look, the person actually running the show, the COO, Gwynne Shotwell, female too. How is her voice not allowing your voice to be heard?
She is very much part of the problem. I think that she comes from a generation of just a different perspective maybe, but she's so ingrained in the culture there and the lifestyle that she's not willing to rock the boat at all at this point. She's very much not the adult in the room that the rest of the world kind of makes her out to be. She is a huge part of the problem. I think it's this brand of kind of, I want to say like girl boss feminism that doesn't really uplift those around you, doesn't feel the need to open your eyes to the very real concerns of people around you. She likes to, when people have conversations with her, she will focus on one counterpoint to a valid argument as a means of dismissing the entire argument, which is disingenuous and really in bad faith.
You have therefore sued, and I'm interested to know what you hope to get out of this, Paige.
Accountability, most of all, but I think accountability because the leadership forms the culture so much, and because it's such a painful place to work, and working at SpaceX can open doors for you elsewhere, and so it's a really amazing opportunity, and I don't think that opportunity should be constrained to the people who are, the typical engineering demographic. There are voices and perspectives to be heard that can contribute in a meaningful way that don't look like the status quo. But aside from that, I think speaking up and telling my story hopefully will help other people who, look around them and don't see anyone else that looks like them and don't know that their experiences aren't isolated to their own experiences, can speak up and share the stories around them. I'm hoping to kind of open up the platform to let people of all marginalized groups have these conversations and feel safe, because I think it should be a human right to feel safe in the workplace.
Bloomberg Technology reached out to SpaceX and Elon Musk for comment on the suit and the allegations made by Holland Thelen, but they did not respond. SpaceX has previously denied any wrongdoing and said that the fired employees involved in the case violated policy. It also said Musk himself was not involved in those terminations. Gwynne Shotwell also didn't comment. We continue to track the story, and if SpaceX want to talk, they're always welcome on the show. This is Bloomberg. Welcome back to Bloomberg Technology. Ed Ludlow in San Francisco. A quick check-in on the markets. I always go to the NASDAQ 100. It's kind of this tech-heavy index, a lot of higher multiple names. AI as a story plays out, but we are essentially flat as a pancake. Remember, it was a markets holiday in the US on Wednesday. But one real clear mover to the upside is NVIDIA. NVIDIA continuing to push higher, and NVIDIA is now the world's most valuable company by market cap. A big part of the story in Thursday's session was something that played out in social media. We talked about it earlier in the program. Michael Dell, the Dell CEO, taking to X, saying that they're making an AI factory for XAI to power Grok. Musk, in response to some other user comments, said Supermicro is also going to be providing server rack and server design to XAI. And you can see that actually, in truth, Supermicro, the bigger beneficiary of the two, but both getting a push to the upside. What they have in common, they just provide the integration of that server rack, but it's the NVIDIA GPU at the heart of it that powers it. Interesting in public markets, we continue to cover what's happening in AI and private companies as well. OpenAI co-founder Ilya Sutskever, who took part in the 2023 board ouster of Sam Altman, has disclosed plans to continue his work at a new research lab focused on artificial general intelligence. For more, let's bring in our AI editor, Bloomberg's Seth Feigerman in New York City. We have a new startup. The startup has a clear mission and remit. Give us the details.
Yeah, we actually don't know too many details here. For the last 6 months, everyone has been wondering, where is Ilya and what is his next thing going to be? And at this point, we seem to have an idea. He'll have a research lab that is building a future theoretical version of a super intelligent AI that would be smarter than and outperform humans if it ever comes to exist. What they're not doing is trying to commercialize those products, at least not yet. So it's a very different path than his prior company, OpenAI. And I think that the biggest question is, one, when will we start to see any progress on that front? And two, who's going to ultimately end up staffing that company? Will we see him and his new company start to hire disaffected former colleagues from OpenAI and other startups in the industry?
The venture is called Safe Superintelligence, and the main pledge that I see is exactly that: no commercial product. They won't sell anything until they have the definitive, I don't even want to say product, they have definitive artificial general intelligence. But the inference is that Ilya didn't share, and we've talked so much about this, Seth. Mm-hmm. Shireen's coming up on the show in a moment, and she's been on this show talking about it a lot. The inference is that Ilya did not agree with Sam Altman prioritizing the commercialization of AI technology. He's kind of going back to the R&D and academic side of this.
I think that's right. There's so much unspoken here, and Ilya has been very quiet on how he actually feels about Sam Altman's leadership and the company broadly. But just in the way this has been structured, it feels like a repudiation of the way that OpenAI has been operating over the last year or so.
This was a story that Bloomberg's Ashley Vance broke in Business Week. Highly recommend you go and read the very long and detailed sort of unveil. But Bloomberg, Seth Eggerman, we really appreciate having you on the program. Let's stick with AI. Artificial intelligence startup Anthropic is releasing a new AI model that it calls its fastest and most capable yet in its rivalry against OpenAI. Bloomberg's Shireen Ghaffari is here on set. We track Anthropic so closely because it's so well funded.
Right.
It is believed by industry to be as sort of near incompetence to OpenAI. The specifics of this model, please, its name, what it's for.
Sure. So the new model is called Claude 3.5 Sonnet. It's coming only 3 months after Anthropic released its last most powerful model, right, Claude 3.5. And what they're claiming is that it's actually ahead of OpenAI on several key evaluations around reasoning, around things like coding and math. And, it just shows how quickly these companies are really on the heels of each other trying to come out with the latest and greatest models.
How does Anthropic operate in a way that is different or similar to OpenAI? When I was on social media this morning, I saw lots of people say, I was involved in early beta access to 3.5 Sonnet, and I have the following opinions. So they appear to do a careful rollout, but it also seems very quick to make a product that I assume they can sell.
That's right. So Anthropic has been focusing much more on enterprise customers as a number one priority as compared to OpenAI. I talked to co-founder and president Daniela Amadai of the company, who told me that they're not distracted, quote unquote, by things like coming up with image generation of a cat on a snowboard. And she said that sort of jokingly. But it's true that if you compare the two companies, Anthropic is a lot more focused on, they say, use cases that are specific to the business enterprise customer.
Do we have any sort of case studies of how Claude 3.5 Sonnet will be used, or like how it's any different or capable to prior models?
Yeah, so the company has talked about how it's being used more for things like financial analysis. They've also talked about partnering with drug companies like Pfizer to help with research and discovery, which is also something that OpenAI is starting to do. So we're starting to see more kind of close integrations of these tools in the enterprise.
Bloomberg's Shireen Ghaffari, one of the absolute rock stars of artificial intelligence coverage. It's great to have you on set. Okay, coming up on the show, we're going to be joined by Devin Kirk, a partner at Portage, for a look at the global fintech industry. This is something we've covered a lot on the show of late, the battle for talent and the impact of AI on fintech. Stay with us. We're going to take a short break. We'll be right back with you. This is Bloomberg Technology. Okay, we're going to take a look at the world of fintech with Devin Kirk, partner at the global fintech focus firm Portage, which has $2.5 billion in assets under management. She's also the co-head of the Portage Capital Solutions strategy, where they focus on growth equity, structured equity, and special situations investments in financial technology, financial services companies that operate globally. And I'm really interested to have this conversation. We've had all kinds of fintech names on the show from around the world, actually just in the last few weeks. And the sense I get is there's kind of a bifurcation of how companies are moving in Europe and how they're moving in the United States, particularly those that might have been venture-backed, grown rapidly, but now they're trying to scale around the world. Would you say that's a fair thesis?
I think that's right. Certainly we're seeing in the U.S. that activity is picking up in the fintech space. Valuations are starting to recover, especially in the B2C segment, and there's more optimism around the IPO markets reopening. But in Europe, things continue to be slower from a growth equity perspective. We're starting to see a bit more M&A activity in Europe, so that's one path to liquidity for growth equity investors that helps to support that market. But overall, it is a more muted environment in Europe right now.
What are the reasons why? I've covered all kinds of industries and sectors over the last 6 years or so that I've been in Silicon Valley and the Bay Area in particular, where growth equity has been very active, and you actually get sort of legacy finance names that come in and support what we would regard as being technology companies, particularly just prior to IPO. Why is that activity and interest not happening in Europe?
Well, I think there's a few dynamics. As you know, European markets have always been a little more fickle in their appetite for growth opportunities within the IPO markets. But I think there's a dynamic specific to fintech where there's a much higher prevalence of fintechs with bank charters in Europe than you see in the US. And that does tie their hands a little bit in terms of the options available for them to raise capital in this market environment where valuations have been a bit whipsawed.
Devin, one of the most read stories on Bloomberg this morning is about a research note from Citi, who say that artificial intelligence will displace the most jobs, or in terms of displacement, be most felt in banking versus other sectors. Is that something that you see happening?
Yeah, we absolutely see a huge opportunity for AI within financial services. The volume of activity that is happening in that space, the more repeat nature of many interactions and forms of analysis allow for really nice use cases for machine learning as well as generative AI. What we are seeing, though, is that within the sector, we expect data sets will really drive the winners for how AI gets applied, and AI itself, the strength of your AI capabilities is going to be less of a differentiator.
I like having you on because you are a sizable firm at scale and you operate in multiple jurisdictions. So where are you putting money to work and writing checks right now?
So to your point around AI, RegTech is an area that we're really excited about. We see lots of opportunities for technology disruption there. We're also spending, increasing time around consumer finance. That's an area that's been hit hard over the last few years, but we think we're at a point now where there's some stronger business models that we're excited to back. We're also continuing to spend time around vertical SaaS and the opportunities for embedded financial services, particularly payments, in many more traditional software businesses. So, those are some of the themes that we're playing with, but from a geographic perspective, as you mentioned, we're active across North America and Europe.
I like the idea of RegTech or regulatory tech, but my understanding is that those are largely software companies that are focused on process, right? Helping companies make sure they're either compliant or they're adhering to whatever sector-specific regulatory requirement is in front of them. How do you be innovative in a space like that?
Well, I think the innovation comes from, how you drive efficiencies, right? Everyone across North America and Europe in the traditional financial services world is looking for how they can take out cost and really grow their businesses with fewer regulatory inhibitants. But I would also say, regulatory change is one of the toughest strategic challenges for financial services businesses to manage. And so tools that allow them to do that more efficiently are ultimately tools that enable them to be more innovative in various elements of their business. And so we see RegTech and managing regulatory environments effectively as really an important enabler for innovation for the sector.
Devin, you join us from Toronto. You've cast your eye over Europe. We've talked about the United States. Which jurisdiction do you think is the best environment from a regulatory standpoint right now that allows for innovation, that allows for a market where sort of technology progress is rewarded?
We continue to see the U.S. as a leader in enabling innovation. There's pockets, if you think about account-to-account transactions, open banking, where European regulators have really led the way. But overall, we see the U.S. environment as being, a really attractive one. There's pockets right now, if you think about banking as a service, for example, where there's a lot of regulatory dynamics for companies to digest. But overall, we see it as a constructive environment and most importantly, a large environment where there's the market opportunity to support investing in innovation.
Devin Kirk, Portage Partner and Portage Capital Solutions Strategy Co-Head. I like that. I can't remember the first time we used the phrase RegTech, but if you're out there and you work in compliance and you have strong feelings about it, get in touch. We appreciate it. All right, thank you.
In the early days of computer programming, a significant historical anecdote is known as Grace Hopper and the bug.
That was not a real person, but an avatar of Joshua Zhu, the CEO of HeyGen, an AI startup that lets users quickly create realistic-looking avatars. And the company's just announced a $60 million Series A, led by Benchmark, valuing the company at more than $500 million. And HeyGen's real-life CEO, Joshua Zhu, joins me here on set. It was an interesting video. We'll bring it back up again, but just explain what it was that we were looking at.
Sure, yeah, that was the digital twin version of me. I was always wanted to try out the avatar technology myself, and then I create two versions of me, and then enabling that, lip sync videos within the same audio, and that's what we see.
The main point of it is that it requires no camera, no crew, or a big studio like we're sitting in now. So how does it work in practice? Just explain the basics of me wanting to create a clip, just like that one.
Sure. I think the whole idea of HeyGen is that we want to produce a software to really help to, simplify the traditional video production. And, nowadays our audience live at the video first row, and everyone is like watching a lot of videos every day. There's more than 1 billion hours of video being watched on YouTube every day, right? But the problem is that video is really, expensive to make, and businesses are struggling to keep up with demand. And there's a better way to solve it, AI generation, and that's what we do, that we are building an AI video platform, leveraging the AI technology to do that. So in short, in order for a customer to really create an avatar or a digital twin of themselves, they need to submit a footage and then submit the live video consent, and also read out the dynamic verbal passcode, and then our AI model will really verify that and create an avatar version of that.
Some of the use cases that you guys discuss are quite interesting. So if you take, for example, a not-for-profit or even a training video inside of a company, think about all the trainings that people have to do every quarter. We do them here. You sit through the kind of videos. That I get, but what's the market for it? Do you find that businesses are willing to pay for this as a service, as a software tool?
Sure. HeyGen's product helped more than 40,000 paying customers to do three things essentially: create, localize, and personalized. As you see from some of product screenshot, that customer can create a video without a camera, basically select the avatar from the template, or they can create it on their own and select a template, type in the script, and create a video that way. And this is great for explainer videos, how-to videos, tutorial videos, training content that you just mentioned.
You just said 40,000 paying customers.
Yes.
But you've just raised $60 million.
Yes.
What do you need the money for?
Great question. So the primary motivation of the fundraising was to bring in the world-class advisors and investors to help us scale. We are accelerating the product roadmap and growing the go-to-market teams. And the business has been profitable since Q2 last year.
Profitable since Q2 of last year. What's your biggest cost? Compute?
Computer, yes.
And what does that look like?
It's manageable.
Okay. Yeah. But the underlying model that powers we're talking basically both image and text to video. That's what we're discussing here. But you built it on NVIDIA, you built it in partnership with who?
Sure. Yeah, we work with lots of the cloud provider, Amazon, Azure to power our inference cluster, and we also have a big cluster to train our models. Especially when we talk about the video model, it's very heavy lifting, and then that's one of the biggest cost area. Yeah.
So there is also concern here. We'll bring the video back up, which is not you. It is AI generated.
Yeah.
But there's a trust and safety component where your platform and tool could be used to create content that is not what it purports to be. How do you overcome that?
There's two main areas that speaking about the trust and safety, and we do at HeyGen. I think the first question is around how do we protect the digital twin? And like I mentioned, for every customer who wants to create a video avatar of themselves, we have advanced user verification, includes live video consent, dynamic verbal passcode, as well as human review in the back. And the second piece is about the content moderation.
If it's posted in the public domain.
Sure. Yeah. And the content moderation piece is about whether when you have the avatar and what are the content, whether the content comply with our policy. So we combine automatic system with AI model plus human review via the human moderator in the back to really make sure there's no misinformation, disinformation, harassment, child safety, political or election specific content being used for this technology.
Just very quickly, it is an election year here in the United States. This exact topic is of big concern. Are you being proactive in specifically the context of the election?
Sure. First of all, we do not allow any political or election-specific content on the platform today. Our policies and products strictly prohibit the creation of unauthorized content, and trust and safety, it is critical to our business, and we're working very actively across the board to the industry, continue developing tooling, best practice to combat misinformation and AI misuse.
HeyGen CEO Joshua Zhu, we've had you in person. We've had an AI-generated version of you. That's good value for us here on Bloomberg Technology, and we appreciate it. That does it for this edition of the show, Bloomberg Technology. Remember, it's been a shorter week here in the United States. We had a holiday Wednesday observing Juneteenth, but recap because the news cycle came back in force. You know where to find the pod on Apple, Spotify, iHeart, and of course, if you want to pod with us, we're podding on all the Bloomberg platforms. 1 day left in the week to go, and I'm looking forward to it. See you soon. This is Bloomberg Technology.